Hey T, thanks so much for joining us. Appreciate you every time you come on and chat with us a little bit about loans. One of the questions that I've received is, what is locking your rate? What is that?
Well, when you find a home and you go under contract, depending on how far your closing date is, a lender will look at locking in your interest rate to protect you from interest rate increases. So depending on what your circumstances, we also have other options like long-term locks that we can look at for you. Let's say you're building a new home and your build time is 6 months. We can look at those options for you to see if that fits your situation. But locking in the interest rate is protecting that interest rate until you close in case interest rates go up. But there are, rules to them. So each person's circumstance may be a little different. We're going to evaluate all that and see if we can lock in that interest rate for you.
Oh, okay, that's awesome. But the other thing I wanted to ask you while we're talking about interest rates, can you talk a little bit about buying down the interest rate?
Yeah, so I'm sure people have heard about points or origination. Those are all fees that the lender can charge you to buy down that interest rate for you if that helps you qualify or makes you feel more comfortable with the payment. But you have to evaluate the whole circumstance for the person to make sure that it makes sense, because it doesn't always make sense for everyone.
Oh, okay. And so in essence, the buying down is really what it's saying. It's
using money to buy down the interest
purchase
rate.
It now.
That's right.
And it doesn't stay down the whole
once you
year?
that type of a buy down where you're paying points or origination is going to buy it down for the life of the loan. There are other types of buy downs where they're temporary buy downs. I'm sure we've heard a lot of that in the market, where you can pay a fee to buy it down for the first 2 years or so. But that one doesn't last. That one's going to go back up to what the market rate was after the buy down period is over.
So whatever the fixed rate is at that time.
Yeah.
And not previous. So you might end up being at a higher rate because...
No. It's going to be whatever we locked you in, the buy down will be that rate when we locked you in, but it's going to buy it down for the first 2 years. So once the buy down period is over, it'll go back to whatever that interest rate is, not what the current interest rates are.
Awesome. So guys, as always, make sure you have a plan. These are some nuggets that she has dropped so that we can appreciate and learn some things so that you can go in and talk to your lender, whether it's T or someone else, and then be knowledgeable, so then that way you can get the best, what's best for you in your journey on purchasing a home. And T, as always, thanks so much. Appreciate it.
You're welcome.